What's good, folks? It's your guy Bendu, and welcome to American Autopsy again. So today I'm going to be doing a special episode of Tox Talk, and I have a special guest with us. So go ahead and introduce yourself, man.
Hi, my name's Alfred. I'm involved in some businesses out here in California.
Okay, man. Yeah. So, what I wanted to talk to you about today, because we've been exchanging off camera and everything, and one of the things we've been talking about is naked short selling. So off rip, I already understand what short selling is with the whole GameStop situation and everything, but when you put the word naked in front of it, that's kind of like obviously like shocking. Like, what is that? What is that? So if you could just take the time out and explain exactly what is that.
Yeah, absolutely. So short selling is when, you bet that a stock is going to go down. And naked short selling is when you do that without any risk whatsoever. And only certain, market or certain billionaire hedge funds and whatnot can actually naked short sell because, everyone else has to actually purchase the stock to sell, to bet it down. But naked short selling is when they actually counterfeit shares of the stock and then sell that. So what they'll do, and what they'll do is they'll bet, take a lot of short positions on a stock, and then they'll counterfeit a bunch of shares, and then they'll flood the market with the shares, and then that drives the price down. And then when the price is down, then they sell their short interest and profit from it. So, the people who are doing it are the DTCC, which is the Depository Trust Clearing Corporation. So anytime you buy or sell any stock, it goes through the DTCC and they actually clear the purchase or sale or whatever. And then they are doing it in conjunction with some of the market makers such as Citadel and Knight, and they will counterfeit the shares, and the SEC turns the other way. And there's a couple of, lots of actually hedge funds. There's tens of thousands of hedge funds out there, or 10,000 or so, but there's, a group of them that just do nothing but short stock and naked short stock as well. And so this has been a very big profit center for them for years. And they've actually driven, thousands of companies out of business into bankruptcy through this scheme where they're just taking shareholder value out of the company without any risk whatsoever.
So that's insane. So they're literally just out of nowhere. They just create stocks out of nowhere. And the government agencies that are supposed to be like keeping track of that and stopping them from doing that, you're basically saying they're involved with it as well.
Yeah, so the SEC turns the blind eye. This obviously happens. This isn't a well-known issue because it's not well-known even in the public, and the media will not talk about it, obviously. And but what they are doing is, the SEC turns the blind eye to this because only the people that, certain hedge funds and certain billionaires actually profit from this. And the SEC is owned. So, they turn the blind eye. Wall Street owns the SEC. And so there won't be any enforcement on this, or there hasn't been yet.
Yeah, you're definitely not going to be getting that with the current administration. So
no.
what I find interesting, so obviously like people have a huge disdain for Wall Street, with the 2008 bailouts, and obviously what just happened with coronavirus. So I feel like that would make people not necessarily want to, pay attention to this, which is why I think it's flying, it's not going noticed by the people. So why exactly should the people, be paying attention to this? Like, how does it affect the everyday person?
Yeah, so it affects people in lots of ways. First of all, people have retirement accounts, mutual funds. Mutual funds invest in a variety of companies. They invest in some of these small cap companies as well. So, Wall Street doesn't do this against strong and powerful companies. They only do it against small businesses that are, enterprising stocks that are penny stocks on the OTC market, pink slips. These are small enterprises that are really form the backbone of innovation in the United States. And, they employ people. Like HCMC is a perfect example. Healthier Choices Management Corporation. They employ hundreds of people. They have patented technologies. They have dozens of stores, and they had $300 million wiped out of their market cap last month through a naked short attack. Now, these attacks are also organized, and it's an organized, a collusive play between certain hedge funds, the DTCC, and the market makers like Knight and Citadel. Now those, and the aggregate effect of this is taking out American jobs, people losing the jobs, these companies going bankrupt, perfectly healthy companies, that had a future being bankrupted because, the absolute greed of Wall Street and obviously the inability of, or the lack of desire of the SEC to enforce any of this.
Jeez, man. Just like one of the things I really clung to what you just said was like it stifles a country's progression and everything. And it's like, one of the hallmarks of, America's like so-called free market capitalist system is people innovating things. So it's kind of not surprising that we're not, innovating like we used to. So that kind of leads me to ask, like, so is this like a new thing? How long has this been taking place exactly? If this
has been going on for years, and definitely probably the last 10 years or so. I mean, the hedge funds have, they're unregulated, and it's basically a hedge fund is basically, a pool of cash for rich people, and they just, they socialize their cash, and then they totally wipe out, even sectors of the economy. Like in the last month, there was an organized short attack, and it was attacked against 409 companies, and they lost probably maybe about $500 million in market capitalization between all of them, just because Wall Street took that out and they hide it through various shells so they don't have to pay taxes, and it all ends up in people's banks in New York, Chicago, San Francisco, etc. And and it's washed. And oh, good.
I was gonna say, so exactly. So what types of companies do they usually target? Is it like tech companies, like financial companies? Like what type of companies do they usually target?
Basically any emerging company that has, that stock has been going up, and that there's market capitalization available for them to basically steal. So the ideal company is, probably a penny stock type company where they're trading around a 5, maybe 1 cent, 5 cents, and then they just get attacked. And this actually, if you look at the 409 companies, been a variety of companies from a couple of dollars, trading from a couple of dollars all the way trading into, a tenth of a penny. And there's been a wide range of those companies that were attacked over the last month.
Jesus, man. So yeah. I know you kind of covered it already, but just to, further clarify exactly, like who, so how does the mechanism of this work in terms of like who's involved, and things like that? Like exactly like how are they allowed to do this? And honestly, like what are some solutions we can do to possibly, rein this in?
Yeah, so public awareness is going to help rein this in, because this is a basically a profit center for Wall Street where there's zero risk. They put zero money up front, and who's making the money is what's interesting, and that's, you see how it works in that way. So the DTCC is making $8 to $10 billion annually from this practice. They get it from money they get for trade from settling the account. They make interest on the loaning the share, and they make interest on the actual purchase of the share. They make transaction fees from the buying and selling. And then the market makers, it's the same thing. They get interest on loaning the share. They get profits from the transaction, the buying and selling, etc. And so they're making about $6 to $8 billion a year from naked shorting. And then, of course, the big winners are the hedge funds that make 90% of these go positively in their direction. Then you got the GameStops and the AMCs, where they lose, and they lost big, obviously. But this goes on. The naked short selling. There's no money. You don't ever lose. So you just counterfeit the share and then put it out there. And that's a little bit different than the GameStop, because they didn't counterfeit the share. They just shorted it, and then they got caught with the pants down. But this time, if they lose, they don't lose any money. There's no money. There's no risk for them. So, and why the SEC turns the other way is because the SEC is staffed by the hedge funds. They own government basically, and they're telling who to staff in the SEC. So they have channels, Bear Stearns, all these companies, and those companies are the ones that are making a lot of the money from the shorting, because they're involved in the hedge funds that are doing the naked shorting.
Jesus,
so
man,
it's a pretty bad situation for everyone.
Yeah, it is. And especially like, you brought up the GameStop situation. It's like, just looking at that situation with how like Citadel and Robinhood and everything like are literally allowed to get away with it because Janet Yellen just did speeches for millions of dollars, on Wall Street. So she's not going to do anything about it. And Biden's definitely not going to do anything about it.
Yeah, there's been several class action lawsuits that have been filed now against both Robinhood and Citadel regarding this manipulation.
Where do you see those going? Possibly.
It's going to take years, but I think Robinhood has got some very big exposure because they basically stopped allowing people to trade these stocks, and that's without any guidance from the SEC, and that's a clear violation of SEC rules. So I think they're exposed. Citadel and Knight, they have some really big problems as well, because there's talk of a class action lawsuit that might be filed against the market maker DTCC for the naked shorting scheme. So that we'll see if that has any corrective effect on the players. There's also Rule 801, which we'll probably discuss in a different video or something, that might actually have some sort of effect as well, just depending on it if the SEC enforces it.
Okay, so yeah, we'll definitely talk about that more. I'm gonna have to bring you back on the show. It's like, yeah, one of the things I'm just I'm worried about is with whenever it comes to class action lawsuits and everything, and just like trying to hold people accountable, just always seems like ironically, conveniently, somebody gets in there that previously worked for the company or has some ties to the company, and then all of a sudden there's this rule change that allows them to get out in a weaselly way. So
yeah, the courts have made class action lawsuits more difficult as time has progressed, unfortunately. So it's taken some of the teeth out of the ability to get things done. And but I mean, we'll see what happens. I mean, not anything's possible, but we certainly hope that this behavior will end at some point.
Definitely, man. I hope something's done about it, man. Well, thanks for coming on to explain everything to me, man. Sure. I really appreciate it. I'm going to have to bring you back on soon to talk more about this, because this is, and nobody's talking about this at all. Like nobody. So
yeah, nobody's talking about it, unfortunately.
But I would recommend people. He actually has Alfred has a channel where he talks about this. I'll link it down below, and he's definitely going to be back on the show to talk about this more. So again, Alfred, thank you for coming on.
Yeah, Bendu. Sure thing.
No problem. You guys have been tuning in to Tox Talk, and peace. Easy.